We're talking with eCargo today. Now, if you don't know the company, ASX code ECG, it's got a market cap of $17 million. The company's building a one-stop ecosystem of platforms and services that give global brands access to millions of consumers across China and Asia Pacific. We have with us the Group Executive Officer, Mr. Laurence Lun. Laurence, thanks for your time.
Thank you, Tim. It's always a pleasure being here.
Now, you recently released your interim results. What were some of the highlights?
Yeah, we released our first half of our results this year. In terms of net profit, we're up 24.7 million, but there's obviously a one-off gain there, about 23.3 million from our sale of our Bleak business. But overall, if we just look at continued operations, we're first time in the last 8 years since we've been listed, we generate a net profit of about 1.4 million Hong Kong dollars, equivalent of about 300,000 Australian for kind of our net profit. Our revenue-wise, we did drop about 7%, but that's mainly because we had about 3 months of lockdown in China due to COVID. Because of that lockdown, we did see a drop in our offline trading revenue to our brick and mortar stores. But then in the same time, we contributed higher gross profit. We improved about 16% in our gross profit due to our higher margin products that we've been selling, that we still have high demand, especially in online sales during the lockdown period. That really helped and supported our business.
Now, of course, I'm going to ask you a question about supply chains. Yes. And the COVID lockdown and how that's affected business. And what are you seeing over there in China and Asia in particular?
Yeah, so COVID, it's still surprising that we're still talking about that after, 2.5, 3 years now. But I think over the whole world, while everywhere is currently opening up, China is still currently running on a different policy. And that is, we still want to go for COVID zero. So in different parts of this in China, especially in first tier, second tier cities, where there are still some outbreaks, we're talking about double-digit cases here and there will be lockdown or at least controlled lockdown in China. That has affected in terms of some of the distribution and some supply chain disruptions. But overall, if we look at the supply chain conditions in terms of logistics, in terms of shipping, freight aspect is not as bad as it was 2 years ago. We kind of starting to return back to normal. There is a certain now policy that goes through. So you do see it like in terms of supply chain rates, shipping outside from China, exporting to other parts of the countries has come down significantly compared to previous years, at least over the last 2 years. So we're resuming some sort of normality there. In terms of distribution, I think post-COVID, or at least still in the situation, customer behavior has shifted, where generally consumption in China has always been increasing. This year is already starting to slow down a bit, but we do see still high demand in products that are more in the health and wellness segment, in the baby and mom section, where people still kind of looking for high quality products from overseas. That is still currently high demand in China and other parts of Asia as well, where we sell.
And from a platform perspective, do you ensure that you've got the right products for the right sort of target market, and do you kind of pivot your business that way and be kind of well weighted for those sort of products?
Yeah, so we're a little different from other kind of export businesses out of Australia. Where a lot of people, when look at China, they might be looking at distribution into the first tier, second tier cities like Shanghai, Beijing, Shenzhen, Guangzhou, the big names that you've heard of. While our focus actually has been in the last 2 years, been in third, fourth, and fifth tier cities, which are more in the rural areas where we see a higher demand, increasing, income is starting to increase, and they're looking for products where the distribution channels there are more fragmented. So that's where we kind of focus on in terms of segments. So when we look at products and the brands that we choose to work with, we always look for brands that are generally high sought after, product categories that we know have a bit of control and sustainability. And then we basically work with our distribution partners in those particular cities to sell. So we I guess in a sense, it's been helping in the business in terms of our strategy, as well as protecting our margins. And in terms of where some of the food products may be on the lower end, single digit margins, while we're still now performing at double digit margins when we're selling to our partners.
And how does a partner find you and your platform, and do you just solely deal with external kind of brands? Have you created your own brands and thought about white labeling products across your own platform?
So since 2014, since our business have established, we were a service provider. So we've generated a lot of knowledge around how to trade, how to sell, how to build a brand in China and other parts of Asia. In the last 3 years, we've shifted that model into becoming really a brand partner, meaning we actually work on exclusivity with the brand partners that have signed on with us. And because of these brands, it also helps us establish networks with our distribution partners, because some of these brands, these distribution partners won't be able to obtain. So therefore, they will come and naturally find us, and therefore we work with them. Second is because we also acquired the Metcash export business back in 2018, 2019. And that also opened up a wealth of distribution channels that we never existed before, and then overnight we already have within our business. So we both have the online and the offline piece when we work with these partners. And so therefore, when now on kind of where we're going now, especially with the divestment of Amplique's business, we're looking at setting up our own brands, whether we invest into brands that are already in the market that we can now export into China and other parts of Asia, or we set up our own brands using the knowledge that we built over the last few years.
And what are some of the kind of milestones investors could look towards from eCargo over the next 6 to 12 months?
Yeah, I think on a couple of aspects, right? One, in terms of our financial performance, it's since I returned to the business, this has always been to drive profitability in the business. So we've been doing everything that we can to change the business structure, our core products that we've been working on, our services, our value propositions, to ensure that we deliver profitability continuously. That's number one. Number two is in terms of the money that we've received from the proceeds from the sale, we are looking to invest into different brands. So in the sense, not just brands, so brands and also service partners that will help build up our ecosystem to make it more valuable for our shareholders that are holding our company. And the third is we also building up our ecosystem. So a number of other announcements that we've made over the months. We've been establishing different platforms, proprietary technology, whether that's B2B trading to enable better cross-border trade between suppliers and buyers in Asia, or all the way to setting up our own marketplace platform to sell, for example, our cross-border fine wine platform that we've been selling wine into China. And the future is in terms of, I will not disclose fully, but it's going to be marketing angle where there's going to be platforms to support the marketing programs for our brand partners that are working with us.
Laurence, always good to see you. Thanks for your time.
Thank you, Tim. Always a pleasure.